Bismillahirrahmanirrahim. This is the first video on activity-based costing. In this video, we will recognize the difference between traditional costing and activity-based costing. We will identify the steps in the development of an activity-based costing system. We will explain how companies identify the activity cost pools used in activity-based costing. We will explain how companies identify and use cost drivers in activity-based costing. And finally, we will solve the exercises comprehensively. Please like, share and subscribe my channel to search for accounting lessons and hit the notification bell button to alert you for the latest video. For all of your questions, comments and suggestions, please put them down in a comment section below, and for webinar and speakership invites, please send me a message at accountingamir@gmail.com. We hope that this video helps students in their academic development and teachers in enhancing their lesson plans and teaching methodologies. We hope this video help ACCA, AICPA, CPA, CMA aspirants. We also hope that this video help fresh graduates who have joined the companies and want to refresh their learning of activity-based costing. Let us start with the difference between traditional costing and activity-based costing. Activity-based costing is a cost system that can be used to measure the cost of providing a good or a service, calculate the profitability of a company's product lines, and perform customer profitability analysis. I have already talked about two traditional cost systems, job costing and process costing, in the previous videos. But activity-based costing is more accurate. Traditional cost systems use a single volume-based cost driver like machine hours or direct labor hours to allocate overhead to products. However, if the cost driver is not correlated to overhead cost, then the cost may not be allocated rationally. For example, if overhead is allocated on the basis of direct labor, it means that increase in direct labor will lead to increase in overhead too. But the two costs are not closely related, then the cost figures will be meaningless. The problem will further aggravate if the prices are set on the basis of cost allocation. For example, based on traditional cost systems, the price for the product is set as $10. However, the real cost to make the product is $12, so the company would be selling the product at a loss. The problem of allocating cost based on traditional cost systems has further increased because of increased automation, as increase in automation means higher proportion of overhead cost. So overhead cost must be allocated in a more sensible way. Let us look into the need for activity-based costing. The need for the new approach is because there is tremendous change in manufacturing and service industries. There is decrease in the amount of direct labor usage. There is significant increase in total overhead cost, and the traditional costing system will be inappropriate to use plant-wide predetermined overhead rates when a lack of correlation exists. In case of complex manufacturing process, we require activity-based costing. So activity-based costing allocates overhead to multiple activity cost pools and assigns the activity cost pools to products or services by means of cost drivers. Activity-based costing allocates overhead cost in two stages. Stage 1 is to overhead costs are allocated to activity cost pools. And in stage 2, it assigns overhead is allocated to the activity cost pools to products using cost drivers. Activity is any event, action, transaction, or work sequence that causes a cost to be incurred in producing a product or providing a service. Activity cost pools is a distinct type of activity, for example, ordering materials or setting up machines. So we have activity cost pool, and we have cost drivers. Any factor or activity that has a direct cause effect relationship with the resources consumed. The more complex a product's manufacturing operation, the more activities and cost drivers are likely to be present. Activity-based costing involve 4 steps. Number 1, identify and classify the activities involved in the manufacturing of specific products and allocate overhead to cost pools. Then identify the cost driver that has a strong correlation to the cost accumulated in the cost pool. Then compute the activity based overhead rate for each cost driver. And then finally assign overhead cost to products using the overhead rates determined for each cost pool, that is cost per driver. So let us now look into some exercises that will help you to understand the concept better. Warner Incorporation sells a high-speed retrieval system for mining information. It provides the following information for the year. We have the budgeted figure and we have the actual figures. We have for the overhead cost, machine hours, direct labor hours. Overhead is applied on the basis of direct labor hours. Compute the predetermined overhead rate. So predetermined overhead rate is estimated annual overhead cost, and that is 1 million. So we have 1 million divided by expected annual overhead operating activity, and that is 100,000. So this is equal to 10 per direct labor hour. Next, they asked to determine the amount of overhead applied for the year. Now, the total number of direct labor hours is 92,000. Direct labor hours, and the rate we have calculated just now as 10. So we have 920,000 as the amount of overhead to be applied for the year. Next, they say explain how an activity-based costing system might differ. Now, if we want to have a more accurate product cost computation, we must use multiple bases and not just a single base of direct labor, and in that case it will be activity based costing that is going to be more purposeful or useful. I have put the same exercise in an Excel sheet so that if my handwriting is not readable, you can go through this slide. Let us look into another example. Mordika company identifies 3 activities in its manufacturing process. So there are 3 activities. We have machine setup, we have machining, and we have inspection. Estimated annual overhead cost for each activity is 150, 325, and 87. The cost driver for each activity and the expected annual usage is given to us, and they ask us to calculate the overhead rate. So the machine setup, estimated overhead cost is 150,000. For machining it is 325,000, and for inspections, it is 87,500. And the expected annual usage number of setups is 2,500. Machine setup for machining, machine hours, it is 25,000, and for inspection it is 1,750. So this will be equal to 60 per setup, 13 per machine hour, and 50 per inspection. Again, you can see I have put the illustration in an Excel sheet in case if you find difficult to read it. Let us go into another exercise. Flynn Industries has 3 activity Cos Pools and 2 products. It expects to produce 3,000 units of product BC113 and 1,500 of AD908. Having identified its activities, cost pools, and the cost drivers for each pool, Flynn accumulated the following data relative to those activity cost pools and cost drivers. We have the activity cost pools, and these are the 3 cost pools: machine setup, machining, packaging. We have the 3 cost drivers, and estimated overheads are given to us. Expected use of cost driver per product is given. This is the total expected use of cost drivers per activity, and this has been split into the 2 products BC113 and AD908. Using the above data, do the following. Prepare a schedule showing the computation of activity based overhead rates per cost driver. Okay, so we have part A, we have the 3 activity cost pools, and the estimated overhead was given to us as 16,000, 110,000, and 30,000. The expected use of cost drivers per activity is given to us as 45,000 and 5,500. So we divide the two and we will be getting the activity based overhead rate as 400 per setup, 22 per machine hours, and 60 per order. We move on to part B. Prepare a schedule assigning each activity overhead cost to the 2 products. So we have BC, the first product is BC113, and this is a mistake. This should be AD908, and this should also be AD908. Okay, so we have machine setup, and the machine setup is given to us for product 113 as 25, 1,000, and 150. And the activity based overhead rates we have calculated just now: 400 per setup, 22 per machine hour, and 60 per order. And now we are going to multiply, and we will be getting cost assigned as 10,000, 22,000, and 9,000. So the total is 41,000. For the second product, AD908, the machine setup is given to us again, that is 15, 4,000, and 350. We have calculated the activity based overhead rates as 400, 22, and 60, and we multiply again to get the cost assigned for each activity cost pool, that is 6,000, 88,000, and 21,000. So the total is 115,000. So the total cost assigned for BC113 is 41,000. and for AD908 is 115,000, and total units produced are 3,000 and 1,500 respectively. So we have 3,000 and 1,500. So this is 13.67 and this is 76.67. Now, if we comment on the comparative overhead, we can see that the second product AD908 is almost 6 times of BC113. This is again the solution done for the example I have explained you just now, in case you find difficulty in reading my handwriting. And we go for another example now, and that is Wilkins Incorporation has two types of handbags. They have standard and custom. The controller has decided to use a plant-wide overhead rate based on direct labor cost. The president has heard of activity-based costing and wants to see how the results would differ in this system were used. Two activity cost pools. So there are two activity cost pools were developed: machining and machine setup. Presented below is information related to the company's operation. We have direct labor, machine hours, setups hours. So the total estimated overhead cost are 270,000. Overhead cost allocated to machining activity cost pool is 170 and 100 is allocated to machine setup activity. Compute the overhead rate using the traditional approach. So when we have the traditional approach, we take the estimated overhead, and estimated overhead was 270,000, and direct labor is 50 plus 150, that is 150,000. So this is equal to 1.8. So predetermined overhead rate is 1.8 times of direct labor cost. Next, we compute the overhead rate using the, so okay, we have number B now. Compute the overhead rate using the activity based costing approach. So for activity based costing approach, we take the two activity cost pools and the cost drivers, and the estimated overhead was given to us as 170 and 100. 170 and 100. And then we have to calculate the activity based overhead rate. So activity for machining, we have estimated 170,000 and divided by the machine hours, that is 2,000. So this is equal to 85 per machine hour. For machine setup, we have 100,000 divided by the setup hours, that is 500. So this is equal to 200. So setup cost is 200 hours. Next, we go to number C. They ask for determining the difference in allocation between the two approaches. Now for the standard, we have the direct labor of, we have calculated as 1.8, and the direct labor hours for standard was 50,000. So 1.8 times 50,000 will give us 90,000, and 1.8 times 100,000 will give us 180,000. Next, we calculate the activity based costing for standard bag and the custom. For machining, we have calculated it as 85, and the machine hours was 1,000. So 85 times 1000 is 85,000. And for custom also it will be the same, 1000 times 85, 85,000. For machine setup we have 200, and 200 times 100, that gives us 20,000, and 200 times 400 gives us 80,000. So the total will be 105,000 and 165,000. So that's how we can find the difference. And again, it has been solved over here for your convenience if you find difficulty in reading my handwriting. And we go for another example over here, that is American Fabrics has budgeted overhead cost of 990,000. It has allocated overhead on a plant-wide basis to its two products, wool and cotton, using direct labor hours which are estimated 450 for the current year. The company has decided to experiment with activity-based and has created two activity cost pools and related activity cost drivers. These two cost pools are cutting cost drivers is machine hours, and design cost driver is number of setups. Overhead allocated to the cutting cost pool is 360, and 630 is allocated to design cost pool. Additional information related to these pools are as follows. So we have machine hours, number of setups, and we have the total over here. And they are asking to determine the amount of overhead allocated to wool product line and the cotton product line using activity based costing. So for activity based costing, we have the two activity cost pools, that is cutting and design in the question, and the cost drivers are machine hours and number of setups. The uh, estimated overheads are 360,000 and 630,000, that gives us 990,000. For the cutting, we have the activity based overhead rate. Cutting is 360,000, the estimated overhead, divided by the total number of machine hours, that is 200,000, and this will give us 1.8 per machine hour. For design it is 630,000 for design, divided by again that is for design they have 1500 over here for the number of setups, so that gives us 420. So next we go for activity based costing for the two products. For cutting we have 1.8 times 100,000, that is 180,000, and it will be for cotton also, it will be the same, as the number is the same, 1000 times 1.8. For designing the rate is 420, and the setups for wool is 1000, so that is 420,000. And for cotton it is 420 times 500, so that is equal to 210,000. So the total cost allocated will be 600,000 and 390,000. Okay. Next, we go to part B. What amount of overhead would be allocated to the wool and cotton product lines using the traditional approach, assuming direct labor hours were incurred evenly? So estimated overhead was 450, was how much? 360 plus 630, that is 990,000, and the direct labor hours is 450,000. so that makes it 2.2. And the total cost to be allocated, because it is evenly allocated, so this will be half will be allocated for wool, half will be of 450 is 225 times 2.2. So let me check. 225 times 2.2, that is 495, and it will be the same amount for cotton as well. So next they say, how does this compare with the amount allocated using ABC in part A? Now the wool product line is allocated, you see, 600, while over here we have 495 for traditional. So for the wool product line is allocated 105,000. We can subtract, it will be 105,000 more overhead cost when activity based costing is used, and as a result the cotton product line is allocated 105 less. You can see we have 390 and here we have 495. Let us look into the same again has been put in an Excel sheet for your convenience, and we move on to the next exercise. And here we have Altech Incorporation manufactures two products, car wheels and truck wheels. To determine the amount of overhead to assign to each product line, the controller Robert Herman has developed the following information. Estimated wheel produce 40,000, truck 10,000. We need 1 hour for direct labor per wheel and 3 hours for the truck. The total estimate overhead cost for the two products is 770. We have to compute the overhead cost assigned to the car wheels and truck wheels, assuming that direct labor hour is used to allocate overhead cost. Herman is not satisfied with the traditional method of allocating overhead because he believes that most of the overhead costs relate to the truck wheel product line because of its complexity. He therefore develops the following three activity cost pools and related cost drivers. So we have three activity cost pools and we have the cost drivers. So that's how the cost has been allocated, and then they say compute the cost that is assigned to the car wheel and truck wheel product lines using an activity based costing system given the following information. For car and truck, this is how the activities has been distributed. What do you believe Herman should do? Okay, so let us look into it. We start first of all with part A. Compute the overhead cost. So we have the direct labor 40,000 times 1, that is 40,000, and for the truck 10,000 times 3, that is 30,000. So the total direct labor is 70,000, and from this we can calculate the direct labor per hour. Total estimated overhead is how much we can calculate is 770,000. 770,000 divided by the total direct labor hours, 70,000, that is equal to 11. Next we move on to overhead assigned to car wheels. So 11 times 40 times 1, that is 11 times 40,000, that will be 440,000. For truck wheels, it will be 10,000 times 3 times 11, that is 330,000, and that is equal to 770,000. Next we have the activity cost pools, and these are We have the part B now, as you can see. So let us see what comes out. We have the 3 activity cost pools, and the estimated overhead for car is 200. Estimated overhead is 220,000, 280, 220, 280, and 270. And the expected use of cost drivers is 1,000, 70,000, and 12,000 and 1,200. So this is equal to 220. This will be equal to 4 and 225. Okay, so the activity based overhead rate for setting up machine, assembling, and inspection is 220, 4, and 225 respectively. And we move on to C, and where they say compute the cost that is assigned to the car wheels. So we calculate first of all for the car wheels. For the car wheels, we have expected use as 200, 40,000, and 100. We have just now calculated the rate as 220, 40, and 225. So this will be equal to 44,000, 160,000, 22,500, and the total will be 226,500. So this is how we allocate the overhead cost for car wheels under ABC system. And we go for the truck wheels now. For the truck wheels, it is 800, 30,000, and 1,100. And the rates we have already calculated, 40 and 225. And this will be equal to 176,000, 120,000, and 247,500. So the total will be 543,500. Okay. What do you believe he should do? Obviously, he can go for it and allocate the cost accordingly, because activity, there are multiple tasks, and it is better to go for activity based costing than he goes for traditional costing system. So again, I have put the example as you can see over here. And if you find difficulty in reading my handwriting, you can look into it. It is done by this on Excel. And let us go into one more exercise. Atlas company produces 2 products, ab bench and ab coaster abdominal trainers. The ab bench is a high volume item totaling 25,000 units annually. The ab coaster is a low volume item totaling 5,000 units per year. Direct material is given to us for the ab bench, and for the ab coaster direct labor is given to us. Each product requires 1 hour of direct labor for completion. Therefore, the total annual direct labors is equal to 25,000 plus 5,000, that is 30,000. Expected annual manufacturing overhead cost is 900,000. So the predetermined overhead rate will be 9,000 divided by the total hours, that is 30. So the predetermined overhead rate is 30. Now, since both products require 1 direct labor hour per unit, both products are allocated overhead costs of 30 per unit under traditional costing. And these are the activity cost pools. These are the activity estimated overheads. We have the activity estimated overheads 1500. Sorry, this is the total overheads, and they are going to be distributed between ab bench and ab coaster. 500 and 1000, 30,000, 20, 500 and 1500. We have to calculate unit cost under activity based costing and traditional costing. So we go for step number 1. And the first step is to identify and classify activities and allocate overhead to cost pools. So if you look into it, the activities, we have the activity cost pools, and we also have the activity estimated overheads. Then they say identify cost drivers, and the cost drivers are given to us as well. We have these are our cost drivers, and that is how they have been allocated. And then we go to compute activity based overhead rate, and that is estimated overhead per activity divided by expected use of cost drivers per activity. That will give us the activity based overhead rate. Now let us calculate. So we have the setting up machining and inspecting, and the estimated overheads are given 300,000, then 500,000 and 100,000. And estimated use of cost drivers per activity is 1500, 50,000 and 2,000. So we have activity based overhead rate as 200 per setup, 10 per machine hour, and 50 per inspection. We simply divide them and we get these numbers. Next, we assign the overhead cost to the products. We have the setting up machine, we have the activity cost pools, the number of setups, and the total number of setups is 1500, 50,000 and 2,000, and they have to be allocated between the two products, 500 and 1,000, 30,000 and 20,000. Then we have 300 and 1,500, and that is what we get from here. Next, we are going to assign the cost to the two products, and let us see how we do that. So we have the expected use of cost drivers per product. It is given to us. That is for ab bench, it is given as 500, 30,000 and 500, and we have calculated the rate as 200, 10 and 50. And we simply multiply this to get to assign the cost. So this will be 100,000, this will be 300,000, this will be 25,000, and the total will be 425,000. The total units produced is given as 25,000. So the cost per unit will be 17, overhead cost per unit. Next, we go for the ab coaster. For the ab coaster, again we have 1,000, 20,000 and 1,500. The rate we have already calculated, 200, 10 and 50. So the cost assigned for app coaster will be 200,000. Then we have again it will be 200,000, and then we have 75,000, and the total cost assigned will be 475. The number of units produced is 5,000. So we have 5,000 over here. So the unit rate will be 95 for each product for app coaster. So the overhead cost per unit for app coaster will be 95. It has been again put in an Excel sheet for your convenience. And we go to part 2, that is calculate by the traditional costing method, and let us see how we do that. We have the manufacturing direct material is given to us as 40. So we have 40, we have direct labor as 30, 40 and 30. For labor, it is given as 12 for both the products, 12 for each of them. And then the overhead we have calculated before was, it is given to us as 30. So the total is 82 per unit and 72 per unit respectively. Now we make a comparison. Obviously the direct material is not going to change whether it is for traditional costing or ABC costing. We have the same 40 and 30. Direct labor will also be the same. It is not going to change. Overhead for traditional we have just now calculated as 82, and for ABC coaster it was 72. In the previous question you can see we have calculated this as 17 and 95. So we have 17 and 95, and you can see now that for app bench the traditional costing it will be 82 and this will be 69, and if you go for app coaster it will be the overhead is how much, 30 each. Thirty and 30, 17 and 95. So the total unit cost will be 82, 69, 72 and 137. So that's how we calculate for under the traditional costing method and the ABC costing method, and that's how we solved our problem, and that makes our calculations more rational in determining the price for the product. Once again, this has been put in an Excel sheet as well. Okay, so we go for one last example, and that is KSA company has 5 activity Cos Pools and 2 products. It expects to produce 200,000 units of its automobile scissors, jacks, and 80,000 units of its truck hydraulic jacks. Having identified its activity cost pools and the cost drivers for each cost pool, KSA company accumulated the following data. So we have the annual overhead, we have the activity cost pools, cost drivers, and the overhead. And these are the expected use of cost drivers per activity, expected use of cost drivers per product. Now use the above data to prepare a schedule showing the computation of activity-based overhead rates per cost driver. Okay, so we have the estimated overhead and that is given to us over here, 200,000, 600,000, 2 million, 1,800,000, 700,000, and the expected use is given to us as 2,500, 1,200, 800,000, 3 million, and 35,000. So the rate will be simply divide, that will be 80, 500, 2.5, 0.6 and 20 respectively. Next, they ask us to prepare a schedule assigning each activity overhead cost to the two products. So we have just now calculated the rates, 80, 500, 2.5, 0.6 and 20. For scissor jacks, we have 1,000, 500, 300,000, 1,800,000 and 20,000. So the cost assigned will be 80,000, 250,000, 750,000, 1,080,000, 400,000, and this gives us a total of 2,560,000. For hydraulic jacks, we have the expected use of cost drivers is 1,500, 700, 500,000, 1,200,000 and 15,000. So the cost assigned will be activity multiplied by the rate, that will be 120,000, 350,000, 1,250,000, 720,000, 300,000, and the total will be 2,740,000. We move on to number C. They say compute the overhead cost per unit for each. So we have per unit. Okay, so we have the total cost for scissors, 2,560,000, 2,740,000. The total units produced are 280,000. So we have 200,000 and 80,000. So that gives us 12.8 and 34.25. Next, they ask us to make a comparison between the two, and obviously you can see that the overhead cost for hydraulic jack is 34.25 and that for scissor jack it is 12.8. So once again I have put the calculation for your convenience, and this completes our discussion on activity based costing. Remember, effective questioning brings insight which fuels curiosity, which cultivates wisdom. If you have any question regarding this session, then please don't hesitate to ask me in the comment box or by email, and inshallah I will reply you back. Thank you so much and happy learning.